So fractional reserve banking, think about it in the old days, used to be when money was backed by gold. If you gave the bank money, you assumed, you believed that they had gold to back it up. And each dollar you had, you could redeem it and actually get the gold. Now, if the bank had gold and you gave them money and they lent the money out or put it to work in other loans and whatnot, and everybody came in to take their deposit out the same day, some of the gold might be there, but the rest might be lent out and not available. And that situation where you don't have things backed one for one, that's what's called a fractional reserve. You only have a fraction of the money you took in on reserve at the bank. The rest is put to work. And so that's how you can get a run on the bank. People want their money back. It's all out there to work. I think there's a movie called It's a Wonderful Life. And the banker has to encourage people not to take all their money out at the same time or the bank will fail. And so banks are fractional reserves. They have a backstop if everybody comes to take the money out. The Federal Reserve can give them more money, like a temporary loan. And if the bank does fail, the FDIC will bail out the depositors. And only banks are allowed to do fractional reserves. Everybody else, like crypto companies and fintechs, if they've put money and taken money, they're not allowed to put that money into impermissible investments. They have to keep that money backed one-to-one at a bank. So in theory, they can meet any demand. And so only banks can operate as fractional reserves. All other fintechs and businesses have to operate on a one-for-one reserve basis. They can't basically take money and multiply it by putting it to work. It's got to be there in custody for the people that entrusted that money to them in the first place. So that's why we want a bank, is so that we can actually take the money that comes to us and put it to work. If we're only a stablecoin company, we can't put that money to work beyond just sort of investing it in T-bills or holding it at a bank. And so for an economy to grow, you need to be able to put the money to work. If everything converted to stablecoins or central bank digital currency, there'd be no credit in this country because there'd be no way to put money to work. People wouldn't be able to get a mortgage. Businesses couldn't borrow money. We wouldn't be able to expand the economy.